Good morning, friends. Now we start our business session. After the very impressive inaugural session, all the dignitaries are on the hall. So I call all the speaker of this first technical session on the dais. I request the chairman of the session, Mr. Pranav Kumar Chaudhary, sir, please come on the dais. I request CA Nilesh Shah, Mr. Ritesh Jain, CA Anand Rathi, and CA Rakesh Somani. Please join on the dais.
I'll invite all the speakers one after another to speak on the subject.
Sri P.K. Chaudhary, my very old friend, other learned speakers, Nilesh Bhai and Ritesh, Sri Somani ji, Sri Agarwal, distinguished members of both my CA profession and broking community. Well, it's a pleasure to be with you all, and I find a lot of young chartered accountants sitting here. As Subodh mentioned in the morning that the subject taken this time is a wider subject on financial markets rather than just capital markets. And I think it's great that a lot of our CA professionals have come into this profession. I know 20 years back when I moved into this profession, it was considered very difficult. The people told me I used to be CEO of Indian Rayon, a Birla Group company, and they said, but chief executive said, Dalal ban rahe ho kya? That was the comment which people used to make, but people didn't realize the importance of the financial services business. And I was fortunate enough to enter early in this game. There's huge, obviously, possibilities of making professional growth in this business. Today's topic, of course, is basically is on the. Can you please put my slides on? Basically, on the financial markets in India vis-a-vis the global dynamics. And what I have tried to do, friends, is bring to you it in two aspects. The one is on the macroeconomics, which is very, very important, because that's what affects, at the end of the day, all the markets, particularly financial markets. And second is the financial market itself, what is the performance. I request you to please give me. So I'll quickly take you through slides giving some useful information. So first is the economic performance indicators, India versus other peers, and primarily I have covered emerging markets because that's where we are competing right now. So look at it, we have been the second best performing economy till 2014, and this year onwards we expect to be the best performing economy. If you look at the inflation, that's one area where we have not done very well in the past. In fact, but last 6 to 8 months, we have seen the indicators of the inflation going down. The key thing in any macroeconomy is how is your fiscal management. And that's where I think our country has been having a lot of difficulty. If you see in the chart, we have been one of the worst performing because our fiscal imbalance was very high. Thanks to the new government, last year there's some improvement, and going forward we expect further improvement to come. Another important macro matter is your external current account balance. That's where again we had very difficult time, but since last year we have started improving. Now it is in very manageable terms thanks to the declining oil prices, thanks to the reduction in the import of gold, which has helped our external balance now to be far better. And the last is obviously the exchange rate. How much is the change? Now fortunately there, compared to emerging markets, our currency has depreciated far less than most other markets. So this is how we compare in terms of the past performance. But what do we expect to do in future? That's what is more critical. Future is always important for any markets. So look at what we have tried to do is to give you the IMF and World Bank projections for India versus others. Now, if you see it here, in terms of GDP growth, India is expected to be number one in the current year as well as in the next year, followed by China, Indonesia. So this is one area which obviously can bring cheer to the financial markets. Once the economic growth is high, obviously all other growths follow. Look at inflation, that's one area where now the inflation is coming under control. And there we see our inflation, though not compared to the lower inflation in China, which is still very low, but we are now at reasonable level of 5 to 6%, which we have been running in double digits in last so many years. If you look at the current account balance, there is a significant improvement and is likely to remain within the range of 1 to 1.5% of our GDP, which is very reasonable. And if you look at the fiscal deficit, again there is improvement, but still again we are the worst performing economy compared to other markets. And that's what actually puts pressure on inflation, that puts pressure on your investments get affected. If your fiscal imbalance is very high, lot of savings go to cover the government expenses, and therefore the private investments suffer. Now this is giving the background of macroeconomy and see what is going to be its effect on the financial markets. If you look at the performance of the financial markets, and what I've tried to do is to make it comparable with emerging economies, compare it in the dollar terms. Now if you look at dollar terms, our equity market has outperformed peers in 2014, and also if you look at the cumulative performance of 2010 to 14. So in last 5 years, by and large, our equity markets have given better returns last year as well as in last 4 years. If you look at the debt market, because financial markets, obviously when we talk of financial markets, we call all asset classes. We talk of equity, we talk of debt, we talk of real estate, gold, everything. If you look at the debt market, our interest returns have been far higher, and actually consequently there is a disadvantage. If your cost of borrowing is higher, your investment suffers when interest rates are very high, and interest rates are quite linked to the inflation. So when the inflation comes down, we expect that interest rates should come down. I think here the RBI, to my mind, needs to be more proactive, needs to bring down interest rates faster than it has been doing so far. If you compare within the equity, there have been mid cap and small cap. If you look at the large cap, which is Sensex, it has given very good returns to about 25%, but mid cap and large cap have given higher returns than the large cap within the same time. But look at, compare with the other asset classes. If you look at during the same period, the bonds market have given a reasonable return of about 12%, but gold has given negative returns. Real estate, because there is no index to show, but by and large real estate either has not increased or has given only negative returns. If you look at the consequence, how the equity markets have performed in last 4-5 years, look at the performance. Obviously there is continuous improvement, and particularly the last year has been doing very well. 2008 was the peak which we reached when the index crossed 21,000, and after that, due to the global turmoil, markets had come down, but sharply recovered from 2013 onwards, and today I think we are one of the best performing markets. Look at other asset classes as to in bond market, again it has been giving varying returns in last 4 years. Gold has been giving very good returns till 2012, and then since then has started deteriorating. The real estate has also been giving very good returns till 2012, and that's why you see a lot of money during 2008 to 2012 flew into gold and real estate and didn't come to the capital markets and equity markets. Things are changing fast now. Now what's likely to happen in future? That's what we are all concerned about. So what are the future is we are now globally connected with all the global economies are connected. So one has to look at what are the global uncertainties which is going through and what's going to be its impact on our economy and our markets. Now, if you look at Europe, obviously, Europe is going through a lot of problems. Recently, you have been going through the articles on the Greece, how this problem is going on. I think Europe is in for a continuing problem for a long time. China has been doing better, but obviously slowing down. I think we should see in the perspective that China has continuously double-digit growth for almost 2 decades. And therefore, even after with that high growth, with high base also, the present growth is pretty good. I think to catch up with China for India is going to take humongous efforts. We have to have double-digit growth for at least next 10, 15 years in case we have to catch up with them. US has been doing reasonably well, but still, there are uncertainties in that market. As a result of all this global economy, the one thing which is happening is the commodity prices across commodities, not only oil. Look at any commodity, the prices have gone down. I'll discuss later what is the impact going to be. And Japanese economy again is going through a lot of uncertainties. Now, if you look at US, the inflation is low, but growth outlook is uncertain. Looking at Europe, the growth is very, very poor. The inflation is also now becoming a challenge there. China is trying its best to, keep its growth. They are going through a lot of reduction in interest rates and reduction in their deposit ratios. The Japanese market, they have been trying their best. They recovered a little bit, but again has been going down. I think the key is for us in India. I think commodity markets will have a lot of effect and to my mind positive effect on the markets. So I would like to summarize on what are the things which are positive on India. We have great opportunities ahead. We have great potential ahead. We have been talking of our potential, but unfortunately we are not able to realize the potential which we have. But still we have a lot of positive points looking ahead. Obviously GDP growth is one major factor. If GDP growth is going to be better, everybody is going to get benefited in the process. Whether it's service sector, industry sector, manufacturing, everybody is going to get advantage of that. The inflation and interest rate, hopefully now, as I said, the inflation is under control and will remain under control because the commodity prices are down. It is very unlikely that inflation will go up. Even the food prices globally are now, all the cereals, wheat, rice prices are down. So I think the key advantage which we expect in economy to come in next 3 to 5 years is the lower inflation and lower interest rate. The external advantage also is pretty good, and particularly we think that the inflow of money is going to be very good. People do worry that, if there are so many problems globally, what will happen to our countries, what will happen to FI's inflows. I know my friends, Nilesh, Ritesh will talk more about the equity markets, but my strong belief is that the present situation is more favorable to India, and the inflow to India is likely to only increase because savings change earnings world over. And if earnings are going to come in our country because of higher GDP growth, obviously we can expect more savings to flow into India. The equity market performance, I think it's great opportunity. The mutual funds have been doing very well. Both the speakers will talk more about mutual funds. It's a very good sign. I think it's a sign of maturing of our investors that people are now going through the very learned fund managers. The best decision is left to the people who are experts in the field. And I think the last 1 year flow into mutual funds is, to my mind, is a very heartening feature. And low commodity prices, as mentioned, is obviously going to be good for India. But still, I think there are a lot of challenges, a lot of negative issues which we are facing right now. The banking sector, is going through it's one of the very, very difficult times. As you all know, a large amount of NPAs. In spite of that, the deposit growth is slow, and on top of that, the credit growth is even slower. And I think that sector has to improve. The structurally improvement has to come. Perhaps the government has to put in more equity, strengthen the banking sector. The global uncertainties obviously will always have its impact. The investment scenario, one of the reason of not going into double-digit growth is our investments are still not picking up. On one hand, we have low capacity utilization in the industry. On the other hand, we have high interest rate structure still. So I hope that if the interest rates go down sharply, the infrastructure is one area which we can revive the growth. And the good part is that the new government is really looking at the infra investments very strongly. Fortunate for the government is that the oil prices are down, so a lot of subsidies you might have seen in paper. Government might say about at least 1 crore of subsidies during the current year, and that will help money coming into the infrastructure. So infra has to trigger the growth. And the last but not least is obviously the policy risk, which is associated with a political management system. I think that's where, to my mind, country is suffering, that our political class is still not realizing the problems which the country is facing. We need to bring reforms very fast. You've seen last 1 week, what is happening in our parliament. I think this very unfortunate. What we all need to do as responsible citizens to put pressure on our politicians to see that they need to look at the country's interest first than anything else. So this is one major area. I think this background, friends, I have given you to brief you the outlook as where are we placed today in terms of our macroeconomics, in terms of financial markets, in terms of our equity markets. I think we have great opportunity. I believe that next 10 years should be the golden period for Indian economy. And if that's good for the economy, obviously it would be good for all of us. I think I'm sure, friends, you will benefit in this conference. I have not talked on the capital markets because I have more learned people here than me. I have longer experience. So it says in our equity market, people come to this market, they become very wise. But before coming to market, they were very wealthy. Don't take it seriously. I think you become both wealthy and wiser if you come to these markets, if you become experts in the financial markets, if you get associated with this. So I give you all the best wishes to all of you for your growth, and thanks to the organizers again for inviting me.